like to introduce our very special guest today, the legendary Joe Montana. As a four-time Super Bowl winner, three-time Super Bowl MVP, and inductee of the Pro Football Hall of Fame, most everyone is aware that Joe is undoubtedly one of the best NFL quarterbacks of all times. Though what's most interesting about Joe is that he personifies excellence, integrity, and leadership, both on and off the field. And in fact, since his retirement in '94, Joe has been active and successful in the venture capital world and other asset classes. In '98, he co-founded a fund of funds called HRJ Capital, where he was an acting partner until 2004. And then at his departure, HRJ Capital is managing over $900 million and investing across venture capital funds, leveraged buyouts, hedge funds, and real estate. And in 2005, Joe co-founded Modern Bank, a commercial bank based in New York City, which specializes in commercial loans and is active till today. And he has served on that board until 2010, when he began angel investing under the mentorship of Ron Conway. So a handful of his investments include well-known names like Pinterest and Dropbox, ShipBob, Open Listings, GitLab, and his portfolio has included dozens of unicorns since. And in 2015, Joe has turned his passion for investing into Liquid 2 Ventures, which he brought together the core partners, which is Michael Ma and Mike Miller, and they remain partners till today. And his son, Nate, joined shortly thereafter and is currently general partner as well. So Liquid 2 Ventures has raised 3 core funds, an opportunity fund, and investing in early stage businesses around the world. Ladies and gentlemen, it gives me great pleasure to welcome the one and only Joe Montana. Joe, thank you so much for joining us.
My pleasure. Thank you for having me. Look forward to it.
All right, so let's dive right in. You've had this incredible journey going from Hall of Famer to investor to entrepreneur. How did you start investing, and what were some of the early challenges, whether it's in business or investing, and then the subsequent learnings that have shaped your journey till this day?
Yeah, I think some of the early challenges are, being an athlete. In the fund of funds world, it was a little easier. We leveraged a lot of friendships to get into that we made by living here and playing here in San Francisco, and to get into the top tier funds. Investing in individual companies as early as we do, you find that you have to bring more to the table than just capital.
Right.
And so while we were on the tutelage of Ron Conway and his SV Angel guys, Nathaniel and I soon found out that it's not as easy to get into these companies early as you think. No matter who you are, if there's something that you don't bring along with you, and that kind of spurred us into really starting the fund. Was the fact that, hey, we can get some other partners. We brought on some guys. Nathaniel caught on to a startup really early that he liked, and he ended up, they went on a crazy run rate, and under a year they got bought by Twitter. So he spent a year and a half, a little more than a year and a half at Twitter before he came back to join the fund. And in the meantime, I found a couple other partners. Both had started companies and had exits to large corporations, one to Google and one to IBM. His company actually started IBM's cloud service. So bringing these partners on who have the experience that when you invest in a seed stage company or earlier, the ability to help these companies understand the growth pattern and what it should look like, who you should be looking at for Series A's, because we don't invest any past the seed stage unless it's a follow-on for one of our portfolio companies. But this brought a lot to the table. Nathaniel's background in going from a startup to an exit to Twitter. Michael Ma's background to selling his company to Google. Mike Miller's company sold to, like I said, to IBM. And we brought on recently another partner, Matt Mulvey, who was a big crossover fund called Co2, and then left Co2 and went to another venture firm called Eclipse that did mostly hardware, but were hands-on investors. So they took positions on the board. We don't do that, but it gave Matt a great background for also learning how to help companies at an early stage and what a good company should look like. So the one thing I learned from Bill Walsh was how to assemble a good team. And so that's what I set out to do. And I think we have a lot of partners for a small fund as we are, but the diversity of everybody's backgrounds has allowed us to invest across all sectors in the venture community.
So before we dive a little deeper into Liquid 2, the venture space generally, I just want you, and yeah, very humble of you to kind of focus entirely on the team, but I want to zero in on you personally and go all the way back. Like, what do you think it is about your upbringing that allowed you to experience the successes that you've now had in multiple domains? Start with any domain, but now the multiple domains. Like, when you think back about your childhood or your upbringing, what comes to mind?
Well, I grew up just outside of Pittsburgh, Pennsylvania, in a little town called Monongahela. There were two steel mills along the river. There was a coal mine in our town. And, you know, it was a blue collar area and sports was really big there and winning was really big. And I think it was ingrained in me early on. I think you'll find, like, if you talk to a lot of successful people, it's really not about winning, it's about not losing. Losing is, you know, winning is what you're supposed to do. Losing is not the feeling you want to have. And so I think that fear of losing was bigger driver than the want to win. I expected to win, and you know, that I think part of that was kind of carried over from when I was a kid all the way through, and then was embellished when I got to Bill Walsh. He kind of helped take that to another level.
And so, and you mentioned Bill Walsh now twice, and obviously Ron Conway. And by the way, I love Bill Walsh's book, Score Takes Care of Itself, one of my favorites. I'm sure you've embodied that philosophy. But when you reflect on those who have been the greatest influences in your life, and whether it's Conway or Walsh or others, what is it about them that sort of made them your greatest influences? And what are those lessons that you're taking with you till this very day?
Well, I think if you start off with Bill, when I got to Bill, he really, you know, we'd been, I went to Notre Dame, you know, we had won a national championship, we played in a lot of bowl games. And so you thought you were really prepared for where you were going. And you thought you kind of had a pretty good work ethic until you found out that you weren't even close. And Bill took it to a completely another level where he wanted perfection, right? He didn't want mediocrity. He goes, we want to be perfect every day, not Sunday, just Sunday. We want every day you step out on that field, it's a game day for you. And, you know, we'd go to practice and he would say, okay, I don't want you to just complete the pass. I want you to try to, first of all, try to complete 100% of your passes. I go, I try to do that. He goes, no, I don't think you really consciously do that. And you think about it, yeah, he's probably right. You know, some of them didn't really matter as much. And but the other thing is he was so perfect. So if you have a guy running out and he turns around, he runs a little hook, right? And he's facing you, you can see where the defender is. So if the defender's over here and he goes, I want you to throw the ball to this number. So he catches the ball and turns this way and doesn't get hit in the face. So you're going to help him. When you're running a crossing route, I want the ball 12 inches in front of the numbers, not 8 behind, not 24 in front where he's reaching and guys are trying to take their head off, you know, going across the middle. And he just was a perfectionist on everything that you did, and took that and my preparation to another level where I didn't want to make a mistake anytime, you know, Monday or Sunday. And and I think when you look at the investment world, Ron was pretty much the same way. And he taught you what to look for and how to start to try to read people, because when you invest as early as we do, we're betting on people. And he and his family become great friends, not just advisors. In fact, we travel with them, some summer most of the time. Somewhere along, we catch up and spend a week or so with them. So I think the biggest thing is that like Bill said, I want you to be perfect, because if you just want to get by and be mediocre and you don't make mediocre, you won't be on this team very long. But if you strive to be perfect and you miss, you can still be pretty good.
Right.
So, and he goes, you're never going to be perfect. In most cases, maybe one day you might hit that, but most likely not. But that's where I want you aiming.
So, and it's interesting that you chose venture capital. I mean, if you think about it, you had experience, and as we said earlier, in leveraged loans and real estate, in the credit side of the equation, but then you went into venture in particular. And given what you just shared, where your kind of your training was towards that ambition of perfection, and venture is such an imperfect space. So, and in fact, you're almost counting on losses and failures. How do you, why did venture resonate as much as it did? And what areas or sectors or within venture were most interesting to you?
I think it was, while I was playing, I didn't, there are a couple guys probably took advantage of being in the Silicon Valley a lot more than I did, but I had my head down into playing something I dreamt of playing for all my life. And so when I came up and started breathing and living a normal life, wow, what did I miss? And all the technology, all the new things that are happening. And the nice thing is that we're not sector focused, because we don't have sector risk on top of it. We just look for the best companies that are coming out. And being in the fund of funds world was no fun, as I say. We were with having all four of those silos. We were constantly raising money, always.
Sure.
Here you raise money, and then you meet with companies. You're seeing new technologies, and so one of my partners is a PhD in experimental particle physics. I still have to have him explain that to me. It's every time we go, I just like to get on the calls with him just so I can listen to him talk. But he and I like the same kind of crazy stuff. We're satellites, and we have some defense companies that are out there. The autonomous things are active. SAS is always everybody's favorite and probably the most prolific, but it's those things that are around the edge that we have a electric flying ferry working down off the Florida coast, trying to become one of the first to ferry passengers on a thing that looks like a big old airplane, but it goes a certain height off of the water, and it's basically a ferry, a water taxi. And we just have a lot of fun things that I like looking at when their updates come. God, just can't wait. And Nathaniel got us into a company called Anduril, which is a big defense company. And he went down to he goes, if you think that their updates are fun, you should go down to the facility. I go, I wish I had the time to get down there, because it would certainly be eye-opening. And but I think the other biggest thing is people. You get to meet a bunch of people from all over the world. We invest. We're one of the first seed stage companies without a entity outside the U.S. that invested in companies outside the U.S. So we're in Africa, we're in Bangladesh, we're all over the place. And so that's kind of how we got into GitLab. Originally they were in the Netherlands, and no one would invest in them because they were outside the US. But we jumped in and had been some of the first money into them, and then they eventually moved back into the US. But in the meantime, you're meeting all these people from all over the world that eventually introduce you to their friends, and your deal flow. The more we can provide help early, which our guys are really, really good at, the more deal flow that comes to us. And that's kind of where we're sitting right now as we get ready to raise Fund 4.
And why seed investing in particular? And also, when you maybe if you could comment a little bit about what led to your decision to start Liquid 2, and
Well,
if there's anything unique about the fund or the structure within the
yeah.
kind of the broader VC world.
Well, what started me was Ron Conway. He said, "Why don't you start a fund? You can invest in a lot more companies. You'll have a lot more fun with it. You'll see a lot more things. I'll help get you started. I'll be on your board. I'll invest. I'll introduce you to LPs." And so that kind of kickstarted. Our first fund was only 28 million, and it was set for 25. We were a little bit oversubscribed, but we're sitting on 22 unicorns in the fund right now.
Wow.
And so it was learning how to read people and learning how to, it's more about people in the seed stage than it is about as much about product and the other thing is market size. You can't have $1 billion company if you don't have $1 billion market. And so we search for, and now, like I said, you invest in a company like GitLab, and then all of a sudden their top people after a while are going to go and start another company. Well, guess who they come to first? And we invest in seed because also, I won't say it's not competitive, because it is, but when you get up into the Series A and B, then the capital increases. Everybody's fighting for, well, I'm going to be the lead, and we don't lead rounds, so we're kind of seen as a friendly investor, and we don't mind being the second biggest check in fund, in a round. And the reason being is that when you look at, and I hate to use names, but I'll just say, let's take two of the top venture funds. When they go after a Series A, one of them's going to win, and the other one's not going to invest because it's a sign that he lost, right?
Right.
So we don't mind being that second guy.
Right.
And when we still bring a lot of help to the table, even at those rounds, because our guys have been there and done that. When we're friends with all the other seed stage funds, because we don't fight for position with them. We pass deals on to them, they pass deals on to us, and we just go forward, in a friendly way. And I think that's been a big plus for us, was when you have a company that's going to pitch a Sequoia or an Excel, they don't want to go to Sequoia and Excel and first, without pitching somebody and having some help. And we step right in and say, hey, we're here. Tell us what you're thinking, who you want to meet. And if you want to pitch us, we'll help you with the pitch and make sure you're ready to go when you go see the big guys.
Wow, it's cool. And again, I'm coming back to something you said earlier, which is so much of this game, particularly at the early stages in which you're in, is about the people. So how do you develop conviction and confidence around the quality or caliber of the people, or even the character of the folks you're contemplating working with?
Yeah, that's the tough one, right? And that's the nice thing about having other partners, because sometimes you see something, or they'll see a flaw that you don't see, and there'll be excitement. And we don't we're not a majority rules. I mean, I should say we are majority rules, but we don't have to be 100% convinced, or 100% conviction by the partners, which I think brings a lot, or says a lot about us, that, hey, you can go out and speak your mind. You don't have to like this company, you don't have to like the person, but explain why. So maybe we'll see the same thing eventually. And it's worked really well. In fact, before we started the fund initially, we actually worked together, Mike, Michael, Nathaniel, and I, for about 3 or 4 months. And I warehoused 20 some investments outside the fund before we started the fund. And then I dropped them back into the fund once we figured out, hey, this is going to work. And off we went. to my wife's dismay, because one of them was GitLab. So
Well, yeah, short-term pain, long-term gain. Yeah,
yeah,
it's
exactly. Yeah.
so okay. So like, and you mentioned GitLab and some of the others, and you said, if I'm not mistaken, I think you mentioned about 20 unicorns that were sitting. Is that just in that first fund, or is that just an aggregate?
Well, no, that's in the first fund. There's another 10 or 12. I don't know the total right now off the top of my head. But I think there's another 10 or 12 or so in our second fund. In our third fund, we're just finishing investing right now. And like I said, we're going to start to raise. We're actually going to raise our fourth fund, but also alongside it, we're going to raise what we don't call it an opportunity fund, but we
Mm-hmm.
call it winners fund, because basically an opportunity fund to most people is a pro rata fund. You just
Right,
take the
right.
pro rata. But what we're going to do, we believe we'll have at the same time coming up about 150 or so companies going to Series B, and that's going to be our entry point,
Hmm.
where we will be able to take the top 10%
Right.
and be able to follow it and take the top 10 and invest in those 15 or so companies.
Well, regardless whether it's 25, 30, 35, what 40, however many unicorns, anywhere north of 1 out of 20, and it seems like your hit rate is considerably higher. In fact, exceptional. And so I guess I'm curious, like, what's the secret sauce, and more importantly, is it replicable? Is it scalable going forward? Because I mean, the track record seems extraordinary.
Yeah,
How do you
we
see
don't
that going forward?
we don't plan on raising. Our first fund was 20, like I said, 28. Our second fund was 53. And our third fund was oversubscribed at 78, I think it ended up. We had a couple people back out in the end, but we don't plan on going over 75. The reason we went to 75 was to have more capital for follow on, not for more investing. We have a
Mhm.
lot of portfolio companies. I think the thing that's most impressive to me is that our loss ratio is pretty low compared to, typically it's one to one. It's
Hmm.
about 50%, but I think we're still in the 30s. I think we just hit the 30s. But we want to just keep replicating that. And, as the fund gets larger and larger, it's really hard to get the types of returns that we want to do. It's hard to get the multiples on the fund that we're looking for. Our first fund is on the way to be looking like a 10x, 8 to
Hmm.
10x right now. Our second fund is on track to be about the same, if not a little bit better. But we just we use the expertise that we have, and we lean on some of our investors who do things and are a part of. We have one guy that is in the biotech space and does stuff for the University of Washington. So when we need a little bit of help, hey, what do you think of this? And we get a little a bit of a more in-depth dive into the company. But for the most part, our ability as a team, I can't speak enough about the guys on the team, because they do. Right now, I spend more time with the portfolio companies because we have almost 700 of them, and they are doing most of the deep diving into the companies at this point in time, because I still look at companies, but I'm not out there actively chasing deals any longer, because they're starting. Number one, we do a lot in Y Combinator
Mhm.
batches, the 2 batches they have a year. Both Mike and Michael's companies went through Y Combinator,
Right.
and so they have access to there. And
And when
and
you think about Joe, when you think about your involvement, and you said you're involved with these, portfolio companies, how do you believe you personally add the most value to those portfolio companies, or perhaps the entrepreneurs themselves?
I still speak around the country. Sometimes I speak to the companies, but a lot of the things that I do when I speak around the country is the fact that um, I make connections, right? Um, Perfect example. We'll take GitLab since we brought GitLab up. They needed an intro to Visa, right? And they've had two other large VCs that were involved and couldn't get the Visa. Well, I just spoke to Visa, and the guy happened to be a Notre Dame guy on top of it. And so it was an easy connection for me to make for them. And so I use that as a stepping stone for um, helping these companies as they mature.
Hmm. And when you look at the state of venture capital today, what are some of the themes that you're seeing in the market, and maybe what are you most excited about? What's keeping you up at night?
Yeah.
About,
Well, I think you always are worried about the market because the market itself has some volatility in it always, and sometimes it trickles down into the venture community. And I think for the most part, though, we've been trying to institutionalize our fund as we move forward to help, mitigate that process. Um, so when you know, looking at small institutions and small endowments, that small and large family offices that are going to be around for a while, that help us, ride through those waves. And um, but we're pretty excited about the autonomous side of things, and obviously everybody's jumping up and down over AI, and um, we're still pretty excited about the space. So a lot of things going there. We just had one of our companies that's doing something kind of crazy off the chart. They're going to be mining for precious metals on asteroids. So yeah, crazy. They were just on CNN actually about a week and a half or two ago. So those are the fun ones to watch, like I was telling you.
and where is capital currently being inefficiently or suboptimally allocated in the venture arena today?
Well, I think you just have to be careful on where you go in the AI space, right? There obviously is a lot of uh, hype about it, and a lot of companies starting and trying to use it, and it's just making sure you're with the right people, the right company. And so we try to warn people about jumping right in without really doing a little more of a deep dive.
Hmm. And further, I'm just thinking back to your comment on Visa you mentioned. So you having been obviously an accomplished and recognized athlete, that naturally presents some opportunities. I'd love to hear if there are any other opportunities that presents. But also, one of the things I'm curious about is, does that also present some challenges, or has that presented some challenges as you embarked on kind of your VC business asset management career?
Yeah, well, in the beginning, I think, was challenging, mainly because if you looked at us as a team when it was just four of us, none of us were in the direct investment world. So when we raised our first fund, we first had to prove to our LPs we could pick good companies. And I think also at the same time, we had to prove to ourselves we could pick good companies. And so as we move forward, that became less of a hurdle. Um, and Probably one of the other problems was early on was that because I was an athlete, I we saw so many sports deals and I didn't want to become a sports oriented fund.
Right.
Um, so we kind of tracked away from it. We might have missed one or two things here and there that were big, but it's kind of, I think we've made up for it in the end as we move forward. And uh,
Hmm.
but those are probably the two biggest challenges in the beginning.
Yeah. And in terms of like your own skills, what did you find to be the most transferable skills from football to venture capital allocation, and what were the most untransferable skills? That makes sense.
Well, obviously, physically, there's not a
Yeah,
lot.
putting aside throwing the football, I got
Yeah,
it.
yeah. No, I think there was more that was transferable than not. I mean, when you look at the competitiveness that you get, the understanding of, wanting to be and striving to be that best and figuring out what it takes to get to there. And, watching Bill, how he assembled the team in San Francisco, makes you think about the same type of process as you go forward, and looking for guys who have the same drive and experience, though, that they bring along with it, and the ability to understand what that seed process looks like. And I think with the guys that we have, we have a pretty good team. And I built this so that nobody leaves. We're all equal. So there's no fighting over. Try to figure out, does capital mean more than bringing in a company or helping a portfolio company? How does that all weigh? It's like, forget it. We're all equal. We'll all have the same salary. We all have the same carry. So,
Yeah.
and so we fight the same.
It's a great structure, and it certainly takes a lot of ego out of the equation, which is amazing.
Yeah.
I think, look, you've just your track record speaks for itself, and just the number of unicorns in the portfolios. But when you think about the mistakes you've made throughout your career, which do you think are the most instructive, or have been the most instructive and transformative slip ups along the way that have shaped you?
Well, I think one of the things that we all did early is that, in that questioning time where you're questioning yourself, your people were questioning you. When we had conviction, we didn't go with it. And, after our second fund, I just said to the guys, okay, look, okay, this is it now. I don't, there's times for a lot smaller checks, because we were putting small checks into companies just for access and to keep track of these companies. I go, now, when you have conviction, it's time to raise our check size and a little bit more. We don't try to get a certain percentage of a company. But our typical checks now are between 250 and 500. Okay. And so they've grown from the 25, 50. We still do 100 here and there when they're really early. But in most cases, and sometimes we're just fighting to get in around. And, we fought, just watching the emails in the last couple of weeks, we had to fight to get 100K checks into places. And so we've managed to do that. The guys have managed to do that. But, I learned from one of our other, not investors, one of our other advisors, Paul Graham. And so Paul Graham and Jessica Livingston, both two of the founders of Y Combinator, and Paul said, don't worry about check size. Don't worry about valuation, because the minute you do, you just missed Airbnb. And so he has a different outlook on things. And when we fight to get into a good company, we're looking for excellence.
And is there anything that you sort of know now as a given that you wish you knew at the start, other than the point you just made?
I think that's the biggest one, is that, when you have that conviction and you really feel, especially when it's in one of the guys' wheelhouse, for them to do that, have that conviction and make sure that you go and get us as much access as we can.
Yeah. So let me phrase that question maybe a different way. When you look out at the landscape of other VCs, what are the most common mistakes that you see made that you guys go out of your way to avoid?
Well, I don't know if there's mistakes made, because most of the other that I could point out, I just think that we're different than most, because we're pretty agnostic, and you see people, let's just say you were in crypto fund and you were based, you're struggling. You don't get to see all the great companies. And I think that's one of the things that we did, kind of following what SV Angel and Ron Conway's fund did, is, you look for the best people and the best companies. And that gives us the ability to invest across all these sectors.
Hmm. And listen, you've been in some heated moments. I mean, when you have a Super Bowl on the line or whatever else, I mean, the pressure has been on, and you've had to face big challenges over your career. When you reflect on the most profound challenges you faced, have all of them been have most of them indexed towards the football NFL career, or and what are challenges that have shaped your worldview today, or recent challenges look like?
Yeah, most of them have been there in the football world. Here, I think the biggest challenge is sometimes like I said, you have to fight to get into a company because you hear about it late, and those are the things we try to figure out on our end is why didn't we hear about this before? How did we miss it getting in earlier? And how can we fix that? And sometimes they're fixable, sometimes they're not, depending on the issue. Because sometimes you'll have somebody just go in and take up the whole round, and the unfortunately for that company, they don't have the diversity of the investors on their side to help them when it's nice to have a group there for when you need help, because not always can we help you 100%. I mean, but if we can't help you, we'll find someone who can.
Mm-hmm.
And I think the smaller that group is, the tougher it is for a company to move forward
Hmm.
in tough times.
Yeah. What would people be most surprised to learn about you?
Um, I don't know. I don't play golf very much. um, I just, and I don't know. I guess I do this every day. So, people would think, why do you do this? I go, like it was fun and it's still fun, and the things you see all the time and the people you get to meet, and whether it's, the guys you're investing alongside of or with, and uh, or the LPs you meet, or in the companies you meet. It's exciting to be there and do that. And eventually I won't do it forever. I mean, I'll be 67 in a couple months, and, you know, at some point in time, I have to start enjoying the rest of my life here before
Yeah.
it goes by too fast.
So, I mean, I guess that actually segues into um, question just around legacy. And it's like one of those things, that words that people throw around, certainly in football careers, but also in, legendary commercial financial careers. But I'd be very curious, what would you want them to write about you on your tombstone? Or what stories are your kids most likely to tell about you?
That I can't sing, I can't dance. I always tell people eventually I'd like that tombstone to be blank. Sorry, we couldn't find him, but we finally did. Here he is.
Why is that?
When they have that show on TV where it goes, where are they now?
Yeah.
It'll be blank. You can't find me.
Why? Why is that important to you?
It just means that I'll be off somewhere having fun and just start finally enjoying life,
Right.
instead of working.
Yeah. 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 So, and since this is a charitable event and you've done a lot of wonderful things in the community, when you think about the things that you've been involved with or things that you decide to support, uh, what's your thought process in terms of prioritizing your own either charitable or social engagements?
Yeah. The charitable side is almost all children related, something to do with children one way or another. And I think the thing that speaks the most about, especially with Jennifer, and what she's done and is instilled also in the kids, is that, we had one of our sons come up and say, hey, I want to, he ended up in school in Tulane, and he loved crawfish boil, right? He goes, I want to do that out here, but I want to do it for a charity. And we're like, wow, that's awesome. So, he just started on his own and started doing it, and just found the children's charity. Actually, he didn't know, but it's one that we supported anyway from before, but he chose the same one. And they, I think the last one they did raised like 75,000 for just on a
Wow.
crawfish boil that they turned over to the charity. And the only problem was is the stuff, the remnants of where they were every time just was a little foul, so they didn't get the same place very often. So they had to keep moving around.
Yeah, no, first I want to come back to your kid. First of all, thank you for your work and support of children. I know you're very involved with Make-A-Wish Foundation, or you have been, and obviously this Lunches with Legends is all in support of children and pediatric mental health.
Yeah.
And you mentioned, Jennifer being very active with your kids. Now you have your son and your daughter who are now partners with you in the business, or involved with you in the business. What unique insights has that experience offered you? And really, I asked that question in the context of perhaps even advice you might offer some of the participating family offices that may share those dynamics as well.
Yeah, no, I think the hardest part is was a little bit of a hurdle having Nathaniel there in the beginning. And in fact, as we were going along, the one guy just said, we don't invest in family uh, ventures. And so after a while, I wrote him back and said, I just want to let you know, and I think we have 15 unicorns now, and Nathaniel has 8 of them. So, um, I think that was it's a big hurdle people get, and I don't know why it is. He has been there from the beginning with us investing side by side. Um, the only one not in the venture world is our oldest daughter. She's in the accounting world. And our youngest son that I was talking about earlier, he has his own little venture fund. He started out of Israel after working for about a year. He and another guy out of Israel started their own little uh, fund around the crypto space on the peripheral side of it, not dealing directly in the coins, but and he's already sent us a bunch of companies that we've invested in. I don't look at them. I go, guys, I can't look at them because I'm biased. So you guys have to make the judgments. And so I think we invested in 4 already from him. So
Wow.
it's a people have to, I think, put aside whether it's family or not and just take a look at what the abilities are of the people around. And Elizabeth is just, when I first mentioned bringing Elizabeth on, my other 2 partners got really quiet, and I go, so I'm just going to tell you one thing: you're going to love her and you're going to hate her, because she's come in, she's going to tell you everything we're doing wrong that we need to do, and she's going to straighten us all up and have us running and going down the straight line. And sure enough, one of the partners came to me and at one point said, "You know what? The best hire ever was Elizabeth." So,
Really? Wow.
so
Wow.
she's a monster part of it. And right now she's on maternity leave, so we're like running wild with. And Elizabeth and I can just see her shaking her head, thinking about the things she's got to straighten out when she comes back.
Yeah. Well, just before I get to the last question, just got to ask you. I think you produce your own wine. You breed some horses. Like, tell us a little bit about that.
Yeah, I got started. Uh, horses we don't have any longer, and the wine we don't have any longer either. So
Oh,
we
okay. Got old
yeah,
news.
the wine came, no, the wine came about really as a charity function. They have the big wine auction up in St. Helena, and I was approached by the winemaker at Behringer about doing this, and hey, let's put this in there. We'll see where it goes, and we'll do it for charity, and all the money will go to I think it was St. Helena. I forget who they all support, like the hospitals and firemen and police departments up there. And so yeah, so it did really well, and so we decided, hey, let's do this again. And I don't know, we did it for 8 years or 9 years or so, and finally he left Behringer, started his own, then sold his winery. So we had to start buying grapes for a change. And I said, well, He goes, do you want to still do this? I go, well, hold on, let me call you back. So I called my accountant and I said, so how much of